Welcome back, everybody, to another episode of Real Estate Served on the Rocks. As always, my name is Charlie Sardelli, and I'm here with
Jameson Amaros.
Oscar Barra.
And sorry about that little week off that we took there, guys. But we're back for you, and you can catch us every week on YouTube at Living in Colorado, the Mile High Perspective, and Apple Podcasts, Spotify, anywhere you can find a podcast. That's where we'll be for you. But we all had a productive week off. You know, we were all working on some real estate stuff, and we know that some stuff happened over that last week and a half that didn't really make too many people happy, right, guys?
Yeah.
And what might that be that hasn't happened for the last 20 years?
We hit a number we haven't seen in 20 years when it comes to interest rates, boys and girls. We hit that dreaded. I keep going back, dude. Like, I think we were in the office, so it had to be a year and a half ago at this point. And we were talking about rates because they were coming out, right? And we're like, man, everybody's saying, like, we could hit 5%. No way, we're not going to hit 5%. And then we hit 5%. It's like, well, we're not going to hit like 7%. And now all of a sudden, we've been at 7% since, I mean, shit, dude, what, last September?
So
almost a year.
When I got in the industry, we were refinancing people out of 7%.
Yep.
And it just, came down from there. And it maintained around 5.5. And I was like, man, what an era to live through, like 7%, 8% interest rate. That's crazy. And that's when purchase prices were low.
Right.
$80,000. You can still find an $80,000 house in Denver.
$130,000 single family home.
And that makes sense, right?
Right.
You hear people say, well, my first house I bought with 12% interest rate back in God knows when.
Yeah.
But the house price was like $20,000.
Right, exactly. Yeah.
Now it's like we're at 8%, and the home prices are $700,000 to $800,000.
Right.
That is nauseating, horrendous.
Yeah, I think
Good Lord.
I think right now on average, it's almost $1,200 a month more expensive than it was 2 years ago.
Wild.
Damn.
Wild.
So,
Well, and guys, as you know, we don't just talk about real estate on the podcast. On this podcast, we also review and drink some great bourbon.
because we talk about real estate, that is why we review and drink the bourbon.
Exactly.
I couldn't do this sober.
No.
No.
Well, and it's funny too because a lot of the time you find yourself sitting around talking to friends. And it's usually over a glass of bourbon that you're sitting talking about. Oh man, I have so much equity, or I don't know if I'm gonna be able to buy. Am I gonna rent? And I think it's just there's a cohesion to it.
There is, yes.
and it goes well.
Anytime you want to have tough conversations, a lot of times there's a social lubricant that needs to be applied. Mm-hmm. And in our case, we just we know we talk about a lot of stuff on this podcast, but if you guys want to join in, we know it's a lot of it's heavy. It's very information dense. Some of it can be, I don't want to say depressing, but
interesting.
A downer.
Hard to swallow.
Yeah, it could be a downer. So
It'd be
hopefully
kinda,
you guys, if you're listening to it, pop this on and pour yourself a glass of bourbon. And I think we have Town Branch, which Oscar was nice enough to pick up, and I know you did some research on it, man. So I'll pour if you want to talk.
Yeah, go for it. I mean, I did a quick brief when I picked it up, and then a quick brief here. It's the first distillery that
It's like
was
an 80 Laws bottle.
Yeah.
that was built. Yeah, they are. It actually is. It looks like 80 laws.
Yeah.
In the last 100 years, is that what we saw? A distillery built, the first distillery built since Prohibition in Lexington, Kentucky. The owners go back to the 1700s. They're Irish immigrants. They started with beer, and then when Prohibition started, they shut everything down. And the family members that brought it back, it was in ruins, just like what was it, Weller, or whoever brought it.
Oh, yeah.
And they brought it back up. They built it, and they started with beer again. And in 2008, they started distilling, and in 2012, they launched Town Branch.
Yeah. Well, and what I thought was
one
really
of them has
cool.
the PhD, right?
Yeah. It was what was it? The son of the original owner has a PhD in solid state fermentation, which is basically like fermenting without any liquids in it or very low liquids. Mm-hmm. And we were talking about it. Oscar was like, imagine talking to your parents about that. Hey, I'm going to college to figure out how stuff ferments and.
Right. And that's how you sell it to them. You're not going to be like, because I'm going to distill later.
Right.
But if you're going to do it, hell, I'll drink some bourbon that someone has a PhD in.
Yeah, absolutely.
Yeah, they're going to put a good amount of thought behind it, not just, hey, let's distill, hope for the best, and barrel that shit.
Well, and I think the cool thing about this one, and specifically for the Town Branch, this is their true cask. So their true cask is actually a blend of 2 different mash bills. So this is kind of like it's called cask strength. But what's interesting about it is if you look up this bottle on their website, and it'll say like proof, and it'll basically say it depends on the batch.
You're going to get what you're going to get.
Yeah, they don't know.
This one's 113.
113. Yes. So it's a hot one. And I'll tell you what, it's been interesting for me. Like I said, I've been drinking bourbon since I was a bartender and all that kind of stuff, but to actually be able to taste the differences and go through them, and then also develop a palate or a taste for bourbon is incredible. And I kind of got smacked in the face with it this weekend because I had a buddy come visit me from Colorado Springs and stay, and I gave him some of that Whiskey Cartel, the executive. And I was like, man, this is one of the smoothest bourbons you're going to have. I think it's great. The flavor's phenomenal. It's complex, and gave him the whole spiel. And then I poured him some, and I gave him the sip. And he took a sip of it, and he was like, whoo, you could start a car with this stuff. And like that was a moment for me where I just stopped, and I was like, oh, I drink bourbon.
Yeah. Yeah. And it's something that you just, it eases into your life.
Yeah.
You're not like, bam, I'm a bourbon drinker. Let's go. It's just like you drink. Next thing you know, you're like, oh, I am a bourbon drinker.
Well, and it's
because everybody asks on the rocks or you mix. No, just
and
leave
this is bottle 44. For us.
So I wanted to point this out just in case people are newer to whiskey. When we talk about cask strength, right? You guys say that it varies. So it can vary between 50% and 75% alcohol by volume. That's number one. Number two is it's non-chill filtered, because what they do, so in a normal bourbon, right, if you guys were to drink Basil Hayden's, like the 10-year we had last year, and you notice that like all of their barrels or all of their bottles are labeled at 42%. Every single one of them is 42%. And it's because the distiller will add water to the mixture to bring it down to a specific ABV or alcohol by volume. Nothing's done here. So to you guys' point, when we say cask strength, it literally means they distill it. They don't add anything to it. It's purposely done to be a higher alcohol by volume, higher proof, which gives it a more distinct flavor. They just kind of let it interact with the wood in the oak barrels, and they use different mash bills, but they don't do anything. So when you do a no chill filter, it's purposely not introducing any sort of exterior factors into that barrel, which is why it can vary between, like this bottle is 113 proof, right? You can go to the store and buy another one right behind it. It could be 115. Right. It could be 107.
Copper Sky here in Longmont. Yes. Those guys are huge on that. 147 proof, 141 proof.
Yep.
I mean, they stay high proof.
Yep.
Great bourbon too.
Yeah.
And again, for the first timers out there, Basil Hayden is probably one of the best to start with. Larceny, we said high wheated, but Basil Hayden, a lot of the purists in bourbon hate Basil Hayden because of that. Like, don't give me that watered down shit. It's good bourbon. Well, it tastes good.
Yeah,
but
it's funny that you say that because we had the 10-year. And Jameson and I were so excited at the beginning of the episode. We were like, oh, it sucks that Oscar's not here to try it. And at the end of the episode, we were like, it's good that Oscar wasn't here to try it. Especially for the
thoroughly
price of the
disappointed.
Bottle,
Thoroughly disappointed.
the one with the purple label, that one's good.
Yeah.
I think that's...
Is that their high rye?
No, I think it's the one that's finished in like a
port
sherry,
cask or something like
sherry
that.
cask.
Yeah.
Or something like that.
Okay.
Yeah, this 10-year though was meh.
Yeah. It was an 80 proof 10-year.
I'm very hesitant to buy Basil Hayden now.
Yeah.
I used to buy it all the time.
I know, same.
Now I'm very hesitant. I'm gonna leave it as a memory that I really liked it.
Yeah.
Because if I, drink it now, I'm like,
Yeah, that's 44 bottles of bourbon. Previous.
44 bottles of bourbon on the wall. Yeah, baby.
Right?
44 bottles outside of our social drinking. That's a lot of bourbon.
Right.
That
Well,
is
and on top of that, it's what's cool about this bottle too is, we talked about in the past why Kentucky tend to be a premium spot to do bourbon whiskey, and that's because limestone. It's the water's limestone filtered, right?
Correct.
And that's one reason why they picked where they reopened their distillery at. And I think it's cool that they have their hand in both brewing and distilling.
Yes.
I think that's I'm interested to see if that adds into any complexity of flavor, because I feel like brewing beer and that is totally different than distilling. But at the same time, you're trying to learn how to pull out notes and generate
chemistry.
flavors. Yeah.
It's chemistry. Both of them are chemistry, and you have to know what you're doing. The difference is when you're brewing, you bad batch. You screw up distilling, blow yourself up.
Yep.
Catch something on fire.
Well, not only that, for a lot of these guys, that's years of work.
And then you brew some beer and it's good to go.
Yep.
This, you're gonna wait at least 2 years.
Yeah, absolutely. I mean, people do brewery, like they sell home brew kits, you know, and it takes a little bit of science to learn how to do home distilling, you know. So it's,
Well, you can moonshine it.
yes.
Go blind.
As
Shit.
as the start goes, you know, for bourbon and whiskey, just do it in your backyard and some copper stuff. But it's been open. It's been sitting for a while. Let's go ahead and get a cheers in. First sip. Cheers, boys.
Cheers, guys.
Oh, let's see here what we got.
I will say, just right off the bat, 113 proof. That nose is light.
It is. Just
Yeah, you
like
got
the
to breathe
color.
in pretty deep to get any sort of burn on the nostrils.
Let's see. Can we do the nose in?
No, the guy
A little bit.
he swirls it around.
It's a little easier.
And he says, "You can't just do this. Stick your nose in it." And you say, "Hey, hello, how you doing? What's going on?" I'm like, "Dude, just fucking smell it and tell me what's up."
Well, and I love watching
Hello,
people.
it's me.
You know, as we're
I
doing
got
this
my
more,
eyes.
looking at social media and stuff like that, obviously my algorithm is tailored towards bourbon and whiskey, and it's funny. I always love watching people because they'll take it and they'll be like, "Let me smell it through my right nostril, and let me smell it through my left nostril."
I think I'm
pretty sure
I'm right nostril dominant.
I have a deviated septum, so it's like you get
It
one
all
nostril.
goes to the left
You
nostril
get
no
one
matter what.
nostril, that's all you get, man.
If I'm breathing through my right nostril, is it going to the right side of my brain? Is it like
Yeah, this
creative?
is my creative side. Logical.
The creative side wants more bourbon. The logical side stops. But I mean, honestly, just off the notes, the burn doesn't take away from what you can smell in the bourbon.
Yeah.
Like, I'm definitely getting caramel, more
Little
wheat
bit-
heavy too.
Yeah.
If you swirl it,
Yeah.
you get a lot more
A lot
caramel.
more caramel.
Yeah.
Okay.
I that's what I'm.
I mean, which would make sense because as these age, that's the breakdown of the sugars when it hits that barrel and
Yeah.
those, I forget, lepticides or whatever it
Yeah.
is that are produced and
And
released.
it's almost
so.
as if maybe because it's fall and it's on the brain. I went to a corn maze the other day, but
Oh man, I'm on my
I'm
third
definitely
pumpkin patch. Let's not.
right.
Oh,
I'm definitely getting.
I'm done.
It's wheat.
Yeah.
Like very,
Yeah.
very grain heavy on the front end for sure. All right, well, I'm
Yeah.
gonna, and I mean, Jameson, you mentioned earlier the legs.
Yeah, seriously.
This is the Marilyn Monroe of
Yeah,
bourbon right now.
it sticks.
Yeah.
Look at
It's
that.
very
I mean, dude, it's
viscosity is thick.
yeah.
Would
Which
say?
you would assume that it's going to be sweet then, because
Yeah.
that's got
Right.
the sugars that are
Yeah.
are kind of leading
or
to that
thick,
viscosity. Yeah.
you know, drinking down
Right.
and
Yeah.
Let's see.
And I mean, just the color in general. It's like
I mean, can
we're-
you look at this? This is well, it's not it's the cleanest glass, but if you
Yeah.
if you do a close up on this, if you can, Charlie,
Yeah.
it's pretty cool. You could see them.
Oh,
It
yeah,
kind of
this
looks
is-
like the top of a Maker's Mark bottle.
Yeah.
Yes. Yeah. Color's great on it too.
Oh yeah, I love the color on this. Like I again, I think it's the age, but I like the darker.
Yeah.
I like the darker color. It usually adds to more complexity with the.
Do we
flavor.
know how long this was aged?
No, because it's
gotta be
it's
at
a
least
mix.
3, right?
Yeah. Well, it has to be at least 3.
And it's
So-
a blend. So
Yeah.
Yeah. All right. Well.
All right. Well,
I already
like-
took my sip.
Yeah, get that sip in.
I'll start that. Although the caramel notes were there on the nose, Brennan for me was very earthy. So I'm going with like, you know, maybe green wheat. You know,
Yeah.
See, I'm
I get
getting
a little charcoal on the back end too.
I'm getting a lot of spices.
Yep.
At
Yeah.
the front, which then
And-
definitely goes into that grain.
it is fire, but it's not.
No,
It's actually
if
very
if you took it as a shot,
maybe.
it would be
Yeah. But I mean, even at that, it's like the burn on the and I'm sorry, buddy, Evan, you came up. I'm sorry that I'm talking like this, but like the burn forward isn't that bad.
No.
it definitely sits on your tongue, and it's almost. I feel like, and I want to look this up. It feels a little rye heavy
Yep.
because you almost get that sour
Dryness.
quench
Yep.
on your tongue where it kind
It
of
retracts your taste buds a little
yeah,
bit.
it makes your taste buds feel tight.
Yep.
The lingering is kind of peachy,
Yeah.
Yeah.
kind of peachy flavor.
I mean, definitely sweet. Definitely the sweet linger with a little bit of that burn in there.
Yeah, I get the earthy up front, like Oscar's talking about. The charcoal for me is kind of on the back end, but it's sweet. Like I can still get the caramel. I think that's probably because I'm smelling it at the same time. But yeah, I get that kind of peachy, fruity, like dried apricot
And
aftertaste.
My wheelhouse is usually darker, leathery,
Yeah.
tobacco-y, and I don't hate this right now.
No.
Yeah.
'Cause I think because it starts with that. That's
Yeah.
how it welcomes you in with a little
Yes.
tobacco and grain,
Yeah.
you know, and then
Here's a cigar. Enjoy my peach chair.
Yeah,
exactly.
You're having a cigar in Palisade. Hey,
Right? Yeah.
Yeah, it is funny that you mentioned the whole your buddy comes up and you're like, oh, you should try this. This is really good beginning. It's like, oh my God, what is this?
Yeah.
So my mom and my dad are the same way. And I got my mom into bourbon through Old Fashions. And now she's graduated to just drinking it on the rocks, or just on a rock, like a normal person.
We better get a picture of your mom
And-
with the bourbon on the
oh,
rocks.
yeah.
Well done, Sam Rose. Well done.
And my dad, he's been a beer drinker forever, right? He likes his IPAs and all that kind of stuff. And he'll drink Old Fashions, like he'll drink cocktails. But I'll give my mom, she'll come over to my house. Hey, what bourbon do you have? I'm like, oh, like this, for example. So give her an ice ball, pour it on there, let it sit for a minute. She'll sip. She goes, oh man, this is really good. Blah blah. Here, Luis, try this. And my dad will try it, and he'll just go. And I mean, you guys don't know, but like my dad's 6 foot Puerto Rican, 210 pounds. My mom's all of 5'2", 120, and she's sitting there drinking this bourbon like, yeah, this is actually fantastic. And my dad's like, can I get some water, please?
Well, and it just goes to show you that, like, again, we talked about earlier, if you get a taste for it,
Right.
If you
Yes.
do drink it,
Yeah.
then it becomes enjoyable, and like that's like the
It's an
first
acquired
thing.
taste, much like us.
Yeah. Yes. But it is definitely something where, like with bourbon, you can tell who drinks it and who
Yes.
doesn't immediately.
Yeah.
Like there's no question. Oh, I drink bourbon. Here you go.
Yeah, try this.
And just
Let
watch
me know
it.
what you think.
Or now,
Just start,
I mean, before I would go to a bar and ask for bourbons, and the bartender just kind of he's kind of what's the word,
smug.
Yeah.
smugs you. I went to a happy hour with one of the industry friends of mine, and we went down to my neighbor Felix, and it's
Yeah.
tequila, right? So I asked for a mezcal old fashioned. I
Yep.
had one
Nice.
at Blackbird, and he made me one. It was actually pretty damn good.
Yeah.
Because I have a mezcal at home that tastes like fucking rubber hose. It's nasty, like acetone. It's gross. So I was like, maybe I'll come home and make one. And it's still gross. Anyway, we started talking about bourbons. He goes, I'd rather do it with bourbon. I was like, yeah, so would I. And I said, you know what bourbons are back there, and then what's your go-to? And he started like rambling on some pretty commercial shit. And I was like, well, and then I started driving like, oh, well, actually, you know your stuff. Here, let me pour you something good and neat, right? I was like, yes.
Yeah. Exactly.
So I was like, I felt pretty proud of that.
yeah.
Like this man knows what he's talking about. Speaking of, if you do want a really good mezcal old fashioned, L5 up in the Highlands.
I'm sorry.
I've been there,
You
but
get-
I've never had their.
Dude,
If you do,
And
if
it's
you do,
so good.
Is
I
it?
went to
My neighbor Felix wasn't bad either.
Yeah,
It was
L5 was money.
a mezcal with a good light wrap cigar, like a Nicaraguan wrap cigar. That
a good
all day.
mezcal, though.
Yes.
I mean, because
Yeah.
mezcal.
Oh, yeah,
the
it can
stuff
be-
I have
yes.
at home.
Yeah, it can
you
be
guys come
trash.
visit the house. I'll give you some, and you're
No.
gonna be like, just taste it, man. But
It tastes
no,
like a rubber hose. I
What
want
is
to
Hey,
have it.
did you remember when I talked about the word? Here, try a sip,
just
please.
try this. I'm trying to get rid of it. I don't want to throw it away. What's that place over off of Downing and like Alameda? Is it the Bluebird, Blackbird? That's the first time I ever had a
think it's a Bluebird.
mezcal old fashioned, and
Yeah.
they're really good too.
Oh yeah.
Yep.
Absolutely. Well, guys, as we sip through this 113 proof, we're going to need it for today's topic, because like we said at the beginning of the episode, for the first time in 20 years, and you're seeing all the headlines, you're looking at all the what's the word? Can't say gaslighting, but it's everybody running around. It seems like everybody's on fire, right? Like
Yeah.
that meme where the dog's sitting at the table and everything's on fire. This is fine.
Everything's fine.
Right? Everything is fine.
And what's funny is that we talked about me refinancing people out of that. It was literally 20 years ago.
Yeah.
It was 2001 when I started
It's incredible.
in mortgage.
It's incredible.
Wow.
And
gross.
we talk about it all the time about, kind of the perfect storm that has led us to this point, between the pandemic, then the low interest rates that got us everybody into a home, and now we have strict inventory. And it's almost a thing where, for me, it's I don't know about you guys, but when I still have acquaintances that aren't really in the real estate industry or know very much about it. So it's amazing to me how, and again, this word comes with negative connotations, but I mean it just strictly by the definition, but how ignorant the general public is to interest rates, mortgages, and home buying in general, right? And you have conversations with people, or at least I have, where they start telling you, oh, I got approved for this amount, and I want my payments to be this much. And then you go, wait a second, so do you understand that you just got approved for this amount of a loan at an 8% interest rate? So you got to account, it's almost 10% of that loan is almost what you're going to be paying for your mortgage. And they go, what do you mean? I can't just make my payments this? It's like, no, it's not how it works, right? And then it goes into, you start understanding why why we're sitting in a room that's on fire and everybody's going, this is fine. Because we've just been barraged with all this information about the housing market is terrible and this is tanking. And then you get 8% interest rates and everybody goes, oh, well, I'm just going to wait. Okay, but waiting is going to hurt you if you're able to do it now.
Well, the waiting is a very short-sighted way to think about it, right? Because there's a lot of assumptions that people make when they say, well, I'm just going to wait for rates to go down, because they're assuming that the rest of it is going to stay static, or that, like, when you talk about the housing market, you're really talking about affordability. And I kind of want to delve into kind of the three things throughout this podcast that affect affordability. Most people just think home prices.
Yeah.
Right? But it's also interest rates, and it's also wages, right? And then within those three categories of home prices, interest rates, and wages, there's other factors that affect all of those things. So if you go to home prices, they're affected by interest rates, but they're also affected by inventory. And inventory is affected by the history of lack of building for the last 15 years. If you go to wages, that's being affected by unemployment rates. If you go to housing prices, or if you go to mortgage rates, that's affected by economic uncertainty and why everybody's flooding to the 10-year treasury and why that gap's so wide. So there's a lot of nuanced things, and people just tend to assume I'm going to wait. And in my head, if rates go down, things will be cheaper.
Well, and the thing is that you jump from one dumpster fire into the other, because right now it's like, oh shit, the 8%. Well, let's wait till next summer when rates go down. Now you're in crap. No inventory. We're going to, and prices are going to start climbing up. So where's the savings, right? And that's a conversation I had a lot this weekend. I have a good friend that wants to buy, and she said, I think I'm going to wait till the spring. I said that if you're solely basing off of interest rate, maybe that's a good idea. I said, but understand right now you could get a lower price. I could still get you something close to what you would pay in the summer with a 2-1 buy down, and you get the best of both worlds. So there's ways around it, and I know, again, it's redundant as hell, but knowing a good realtor can explain that to you.
Yeah.
And again, right now, all my businesses need to, not want to.
Yeah.
So, we'll talk about the rate, but it's not. It is on fire, but it's. Well, we have an extinguisher.
I think you brought up a phenomenal point there, especially in this market. We often get, how are people buying? Home prices are ridiculous. What are you talking about? It's going to tank, and people can't afford homes right now. But again, there's wants and needs, right? And
Great song, by the way.
During the pandemic and previous years, we were in the want category. People go, oh, I can do this. I want to do this. I'm going to. Now I feel like this amalgam of inventory, prices, and interest rates has created it into a I need to market.
You know how many buyers are on the bench right now, just waiting?
Oh yeah.
Just wait till next spring. Wait till next spring. It's going to be mayhem.
We did the episode talking about when we went over like the millennial numbers, and it was something like 136,000 or more, or what was it? That kind of number that people are renting that make over. No, it was 50-something% of millennials make over $100,000 and are waiting to buy a home. And it's like, where again, I get it. It's, hey, interest rates are high. My monthly payments are going to be high. Yes, absolutely. But think about the long term, because like you said, when it comes back down level, you're going up against.
Okay, let's take worst case scenario. You said $1,200, correct? $1,200 more now. So let's take the $1,200. I'm a numbers guy, and I try to make sense in the easiest way to digest this. Let's say that your mortgage is $1,200 more now. You take on that responsibility if you can afford it. But you are purchasing a home $50,000 to $75,000 less right now.
Right.
How long, again, is it going to take you to save $70,000 at even $1,200 a month? And this isn't going to last forever. Most of NAR's projections are worst case 2025 will be back in the fives. So let's take a full year at $1,200. That's $12,000. Going into 2025, you drop your interest rate, and guess what? Now you purchased a home $70,000 less, and maybe you paid $12,000 more, but now the savings are still $55,000 or whatever the case may be.
And at the rate that
what makes sense, guys?
Well, and I was going to say, and at the rate that homes are going up, you buy now, rates come down, the market gets more competitive, more people are coming in bidding higher, you have more on per home. Guess what? That $12,000 that you just spent, if you want to, I guarantee your equity just went up.
Oh, absolutely.
You know what I mean?
And
So
again,
it's
I'm not forcing anybody to buy. Again, my businesses need to right now. And if you don't feel comfortable, fine. But if you have the ability, I could show you how it makes sense, and then we can move forward. If it doesn't make sense, it makes you uncomfortable, you know what? Hang on. Yeah. It'll get better, and then we'll talk again, and we'll get into the bidding matches and the fight, and it's like a cockfight out there, and we'll see what's up. But for the time being, let's sit down and have an intelligent conversation of what makes sense, financially, and if it makes sense, the long term, how much you're going to save in that. Because remember, a lot of people that refinance because I'm consolidating cars and this, that. Well, now you just put 30 years on this, and how much more are you going to buy? Same concept here, right? Mm-hmm. Just not on the refinance side. It's on the purchase side. You're going to finance an extra $75,000. How long is that going to cost you long term when you could just reduce it by $75,000? Mm-hmm. Now, maybe pay $1,200 more for a full year, and maybe not, because we're going to put you in a 2-1 buy down. So you kind of get best of both worlds if you can fly that scenario.
And if you guys are listening, you can't see on the video that Jameson's just itching over here. He's over here touching the computer, scrolling and going. So I'm gonna throw it that way.
No, I want to make sure people understand that the issue we have is it's not as simple as, rates are just going to go down in a year, mm-hmm. right? Because even if they do, there's so many other things they're going to factor into people, whether or not they're going to be able to afford what they want in a year or 2 years versus right now, right? And to me, and Oscar made this point very clear, like, you can get in somewhere now relatively cheap, considering if you're in the right financial mindset and you have the savings and you're willing to pay a little bit more on your mortgage, you can get things like buy downs. I think I looked at the stats. So of home builders, 72% of home builder incentives are rate buy downs, mm-hmm. right, for new homes. That's huge. Like, that in and of itself is a massive, massive opportunity.
5%. They're still
if you look at the month of September, in just Denver metro area alone, okay? Denver metro area, I think it was like 7,200 transactions, somewhere around there. 56% of homes took a price drop, okay? We talked about this last week. I wouldn't even price drop my house if I was listing it. I would just offer more incentives.
Oh, absolutely.
You know what I mean? Yep. Like, hey, we can cut the price by $10,000, or we just keep it the same and say with a full price offer, you get 10,000 concessions.
Damn,
come bring us an offer. Give them 20, whatever it is. Right?
And the magical thing that there's still assumable rates out there.
Exactly.
If they bought down payment assistance or VA, that gap's very, very small.
Yes.
Come on, guys.
But here's why the problem's just not going to resolve itself. Okay, so NAR, so the National Association of Realtors, has a home affordability index that they talk about. Okay, and there's a couple of assumptions. The assumption number one is the median income needed to purchase a home, a median priced home in the United States, with 20% down, assuming that the buyers only want to spend 25% of their income on their principal and interest mortgage. Okay. The average on like a balanced market is 100, which makes sense, okay? If you go towards when we were in the pandemic, that bumped up to 167, which means they had a 67% cushion on those ratios. Right now, it's at 86%. So it is the definition of unaffordable.
In the general public or the masses, I can see how and why they use 20% down, right? I'm kind of taken back that NAR still uses that, because on average, how many people actually...
I think the average right now is like 10.5.
Yeah, how many people bring in 20%? Like, I mean, there's so many products out there, and then obviously FHA 3.5, conventional 5%, and then there's portfolio products.
I do wonder if they're taking into account cash buyers.
Right, and maybe that skews it a little bit.
Yeah.
But still, 20%, it's been the standard in American financing forever, and it's just kind of crazy that they still use that stat. But again, bringing in 20% is probably your saving grace in this market right now.
Right.
Well, and I think
if you have a big down payment.
Yeah.
And I think that's the thing too is, and we talked about this previously as well, but we're in a position where the United States it's not cookie cutter. The markets are not the same anywhere. Like, one state is not relative to another right now. Right? So like
50 states, it'd be few and far between that are similar.
Right. And what we're seeing is, especially in Colorado, is, especially compared to the past 5 to 10 years, there's less people settling in, there's more people moving out. in Colorado. And those people who are moving out are the ones that bought 15 years ago, 10 years ago, I mean, shit, even 5 years ago now, that got the equity and they're going, yeah, I'm going to take this and I'm going to go to Kansas. I'm going to go to Montana. And I've talked to many people whose family members are leaving and they're questioning, hey, do I buy here or do I just leave, right?
Just don't buy in Texas or Maryland.
Right.
Yeah. They're the
taxes are
I think
gonna
we're the
be
Denver's the
horrendous.
12th or 15th ranked metropolitan area as far as exodus over 2023.
Mass
Yeah.
exit is going on right now.
Well, but at the same time, like that, it makes sense, right? Take your money and run. If you can and you're going to get a better quality life, go do it. But if you're looking at staying in Colorado and buying, knowing the tactics, knowing what's going on, I mean, just in Colorado alone, when you look at inventory, they can't keep up.
Speaking of different markets, I mean, here in Colorado, we're dealing with taxes, right? What was what went out the door?
Gallagher.
Gallagher went out the door, and now we have HH on the ballot, right?
Yep.
And from what DMAR, no on HH.
Yeah, it takes away Tabor.
Yeah.
Right.
So there's
And then explain what Tabor is, another acronym.
well, Tabor is just the tax bill of rights for Colorado, which essentially means that whatever Colorado takes in taxes, they pay what they need to pay as far as their fiscal budget every year, and then whatever's left over, they then refund that to the residents of Colorado that paid those taxes. The argument now is if HH passes, those refunds will only go to homeowners. So it basically leads everybody else that's not a homeowner out in the cold, and they want to give it to homeowners to try and offset the property tax portion.
But then it's going to further skew what we're trying to fix from Gallagher.
Yeah. Well,
Right.
and here's the cool thing. So, and I've talked about it before. Alicia, my girlfriend, she's actually she's a leasing agent downtown Denver, high-rise building. And she came home the other day and she goes, "Hey, they gave me a market report. Can you help me with this?" And immediately I was like, "Hell yeah, I could help
Give
you with
me
this.
it.
Let me look at these numbers."
Let me
right?
take this apart.
And the crazy part is, we always talk about the correlation between the housing market and the rental market. And what they're projecting is that they are going to have a boom in not only units, but people renting. And so where normally they'd be terrified that they have too many units, now they're going, oh, wait.
We're going to have a lot of units.
The housing market is not doing good and people can't afford.
We have a building going in Cask Rock. That's going to be rentals. All the community right by Wilcox. That's all townhomes. Those are all rentals.
Yep.
It's huge, but at the same time, rentals are expensive still.
Yeah.
Rentals
Well,
are
and it makes sense,
expensive.
right? Why are rentals expensive? Because if it's single family, okay, they're going to raise the market rent, and if more people rent, then you can charge more because it's a supply and demand.
Except for Denver.
On top of that, if I own a single family home and I'm paying property taxes on that house, and as my home appreciates that I'm renting, my property taxes are going to go up, in which case I have to continually raise my rent. So the whole idea to me, and I just posted this on my Facebook story. If you guys follow me on Instagram, the Colorado real estate guy, rent and home prices have followed each other historically, okay? And at the end of the day, the conversation just turns into, do you want to invest in yourself or do you want to invest in somebody else's property? It doesn't mean you have to do it today, but that has to be the mindset. So if you sit there and go, okay, you know what? I physically cannot afford to rent or to buy right now, put a plan in place to buy later. Because what people understand, and I've seen this argument a lot where it's like, well, millennials don't want to live in the same place. So they like the flexibility of renting, which I think is just dumb, right?
Right, and
here's why.
I can argue that point too.
Yeah, and here's why, right? I think Grant Cardone was one that said it, and I just...
Well,
I don't-
Grant Cardone says he leases everything.
I know, and
but
I
he's
don't-
like an uber crazy investor,
Correct.
and he doesn't tell you that he's investing on 100,000 other things that are
Yes.
making a fuck ton of money.
Yeah.
But most people that make
you
wealth
are a
in the U.S.
normal-
are real estate.
Yes, if you're a
based.
normal human being and you have your 9-to-5 job...
Not Grant, because Grant's a fucking phenomenon,
Exactly,
right?
right. He's a 1%er for a reason,
Yeah,
right?
100%.
But the argument was, well, we want to be able to pick up and leave. I don't want to be tied to a mortgage and have to sell my house and so on and so forth. But the funny thing to me is, if I'm going to live somewhere for 3 years, okay, we've already seen every single projection has changed. And even just in the next 3 to 5 years, the average home price appreciation is going to be around 4 to 5%. So if I buy something with a small down payment, 3.5%, and I do want to move in 3 years, you can do one of two things. You can borrow against the equity of the house, and then you can take that money, pay off your debt, and go rent something in a different city, and then rent your primary residence out, and now you have an asset, right? Or you can sell it, and even after commission and closing costs and all that kind of stuff, you're still going to walk away with money that you can then move to another state
Now
to
I'm
do
itching.
it, right? Go
I'm
for
going
it.
to give you two scenarios.
Yep.
They don't want to live in one place. Again, the rents, you could rent it, whatever. How hard is it to break a lease?
It's expensive to break a lease.
And if you break the lease, do you get your deposit back?
No.
Okay. How hard is it to sell your house after a year, right? In the lease. You're tied down for a year. You buy a house yesterday, when can you sell it?
Tomorrow.
Boom. Faster. So the whole they don't want to live in one place is bullshit. And guess what? You give a deposit, maybe you get it back. You put a down payment. Oh, appreciation. You're not only going to get it back, you may get a little more money back. Pay your cards straight. So I can argue till I'm blue in the face.
Yes.
I've seen it all. I've been in this business way too long. I can argue everything on both sides, positive and negative. But they don't want to be tied down in one place. If you're leasing, you're going to be tied down for 1 year. And if you want to break it, it's going to cost you money.
Well, not only that, but
if
what
you buy a
happens if
house, you could sell it the next day and make money.
Yeah. And what happens if like your job changes? Like, oh shit, I have to be here for a year and like 5 months. Now I got to rent month to month, which is now 25% higher than normal rent, and I'm stuck. Or I have to sign another year-long lease.
And most investors here in Colorado that I deal with, guess what? They have investments in other states.
Right.
Boom, boom, boom. You get relocated. You have an investment in Colorado. You see it. You touch it. You've lived in it. And now it's an investment. You go do that in another state.
But here's why I wanted to bring that point up as to why the whole renting versus owning thing is tough, and why I believe personally, right? Like your goal should be to own something. You need to own something, okay? Like that's just basic. Come to America and live the dream. Just own something, and the easiest thing to own is a house or a townhome or a condo because it's yours. You can use it. It can appreciate, and you can make memories. You can do all these different things. But why that's important is because the path back to what we would classify as, normal affordability is very hard. And I've got statistics.
Yes.
Imagine that.
Well, and that's something that, again, and I'm going to kind of loop around to it. A lot of the times you talk to people, right? And I like that Jameson brought this up because a lot of every conversation is, oh, well, the market's going to tank and then I'll get a foreclosed home for this amount of money. And it's like, when I hear somebody say that, my brain immediately shuts off and goes, it's not even worth talking to you because you don't understand.
I run from that.
And right? Because at the end of the day, it's just not, that's not how it's going to work.
Correct.
You're
And
not
what
the person
Jameson
I want to talk to.
Right? And what Jameson is about to explain is why everybody's waiting for 2008 to happen again. And
Correct.
It's not going to.
It's not going to happen. But there's, and it's not just real estate agents sitting here going, buy a house because, we want to make money. It's nothing like that. Yeah. It's strictly just the numbers, the facts do not show that.
And they tried.
Yes.
That's why our rates are, because they tried to crash it a little bit.
Yep.
But.
Go for it, Jim.
Go for it.
So what is it, if the market's not going to crash and we're not going to see this amazing regulation that everybody expects is going to happen, what's going to happen, right? I mean, it's
I need some more.
Because at the end of the day, it'd be great. We'd all love if it just crashed and then now everybody can afford a home again. But there's 3 factors, and we touched on it earlier, that cannot and will not allow that to happen. So go for it, Jim.
Well, so we'll set this up. I don't want to beat a dead horse, okay? But the housing market crash, it's people overcomplicate it. It's supply and demand. That's it. You can take whatever number you want. The fact of the matter is we're short anywhere from 1.5 to 4 million single-family homes in the United States.
And that was the hangover of the recession.
People
right?
just stopped building. They stopped investing in builders. Builders went out of business.
There was a front-end cause and a back-end cause.
Yeah.
The front-end cause was that the financial sector, right? They were giving loans that sucked, 228s, subprime lending. That caused that shit to go. Now, the hangover part is that so no one was buying, all the foreclosures, all the short sales, and then people boomed out of Colorado. There was no building being built here.
Right. Exactly.
So, and that's what
anywhere
caused the shortage anywhere.
And
then instead of coming back to work, people went to the oil rigs. They didn't come back to Colorado, at least in Colorado, right? And then that's what kind of skewed everything. And now we're here.
Yeah. So if I look at affordability and why I don't think affordability's got a long way to go, and this ties into Charlie saying that there's not going to be a crash. This is just statistics from a bunch of different Moody's Economics, BlackRock, as well as Black Knight. All of them have these projections, okay? So just to get to an affordability standpoint that makes sense. And again, we're talking about people spending what we would call rent poor, right? Spending 30% or
30% or more of your
over your income on either rent or, in our case, on a mortgage.
I did that on purpose. It's actually opening up.
This is what would need to
liking
happen for us to go back to normal historic averages of affordability, which means the median income can afford a median price home. These are actually kind of wild. So if home prices just stay where they're at, okay, and nothing else changes, rates would need to fall to 3.55% in order to get back to a historical average if home prices stayed the same. We know that's not going to happen, okay? That was an anomaly. It will never happen. Probably in our lifetime, it will never happen. So there's
Unless
scenario
there's another
one.
pandemic we can't get a hold of.
Right, exactly, yeah. Unless, again, black
I think
swan
we
event,
learned from
different
it.
story.
Probably not going to happen.
I don't think so either. But that's what you print $15 trillion and pump it in the economy, so what happens. Anyway, so that's scenario number one. That will not happen. Scenario number two, let's say home prices grow by 5%, which we think is going to happen based on demand and supply.
History.
Right? Rates would need to fall to 3.16%. Do we think that's going to happen?
No.
No chance in hell. Scenario number three, let's say prices stay the same, but we get our wage increase by another 5% nationwide. Then rates need to fall to a 4%. A little bit more realistic, okay? I think this year wages have grown to 5.3%, but inflation's still 3.7%. So again, there's nuances to this shit. There's levels to this shit, as Meek Mills would say. Now let's say that if mortgage rates stay at 8%, okay, and they're just there for a while, and we want to get back to affordability, median home prices would need to fall by 35% to about $265,000. We're at $413,000. Why is that not going to happen? Because, again, supply and demand are keeping upward pressure on home prices. And then lastly, let's say rates stay at 8% and prices of homes stay the same, then wages would need to increase by 65%.
Wow.
Right? Mm-hmm. So the point of that is all of those scenarios, some of them are just, you can just X them out and say, this will not happen, right?
I mean,
other
65%.
Other ones may happen, right? 65%, it may take 3 or 4 years. And that's assuming wage growth is at, call it 20% a year.
Lot.
That's a lot.
That's
Historically,
a
that is
lot.
the highest it would ever be. So now you sit there and you go, okay, well, do I want to try and get on this train now before it leaves the station, or do I want to wait for the next train that may not come?
And you know, what's funny is I had that conversation with myself when I bought this house here in Castle Rock. I said, do I want to jump on this train now and just eat it? Because I was like, well, we can't keep climbing. We can't keep climbing. Not only did we climb, we jumped and spelunked up.
Yep.
And
even if we do just keep climb, over the last 60 years, home values have doubled every decade, like clockwork, right? Like that's just what it is. And if I look at it, I go, okay, let's say I'm stretching my affordability a little bit now, but I've got a solid job, I've got savings, I've got a financial plan, I've worked with professionals to make sure I'm in the right spot. And I then buy this house, and yeah, my interest rate's higher, my mortgage rate's a little bit higher, but as I'm continuing on this journey of home buying, I get a raise every year. Let's say it's 5-6% every year. Well, my mortgage isn't going to go up 5 or 6% every year. So now you're starting to close the gap of your own affordability just by living in a home. And oh, by the way, that home is now appreciating. You owe less on it and less on it and less on it. And it will put you in a position, whether it's 1 year, 3 year, 5 year, 15 years, to turn around and go, okay, I got a $150,000 chunk of change. Now I can buy what I really want at a price that I really like. And that whole time, as everybody else is paying more in rent, well, my wages are increasing. I got a promotion. I did this. I put more savings aside, whatever it is. And you put yourself in a better position for generational wealth. It's a fact. I don't care what anybody says. Renting, to me personally, if your finances allow you, renting will never make more sense than owning a house.
And you know what? I'm just going to tell you right now, JC would be freaking proud of you, because that was one of the first podcast topics.
Yeah.
The family that came in with $1,000
right.
and then bought another property.
Another $1.2 million property.
Yeah, and they put a chunk of change down. Absolutely.
Yep.
And that's kind of been lost in translation with all of what's going on right now.
And I think this is what's important to note too is that
great point.
With what we have in society right now, we people are pigeonholed into a group of like-minded individuals, right? And we have this separation, or this mental separation, I would say, where you have people who believe that they're being held down. They cannot afford it because BlackRock's buying up all the homes and the rentals are going up. When at the end of the day, in all reality,
institutional investors this year have gotten crushed. They've
They
invested
lost their assets
at a slower rate than they ever have in the history.
Mm-hmm.
Yep.
right? And but now everybody's in the same social media bubble, and it's perpetuating this.
Yes.
It's not doable. I don't have the money. It's not doable. It's not doable. Instead of, hey, what are my options?
Yeah.
Right. And I think a key element of this is, unfortunately, we all want what we want, and compromise is not something that as humans we are good at.
No.
But this is a compromising market right now. Like if you can get into a home with a good monthly payment that's down, but there are some things in the house that might cost you to fix over time, do it because you own an asset. And guess what? You could take out a loan to fix some things and pay that over time. And I think with what Jameson just said about, virtually we'd have to have another perfect storm of a situation to where everybody would be satisfied with home prices or interest rates or what you're earning, right?
Well, just new builds alone, right?
Yeah.
We have come to the conclusion now that you got baby boomers who are aging in place. Okay? We talked about it
Is that a very, 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 very nice way of saying they're dying?
In their own houses that they're not going to sell.
Yes.
But it's because, and we talked about this, I think it was the last episode, 64% of homeowners have at least 50% equity, but 35% own their homes outright. They're not going to fucking move, right? They're good. They'll just reinvest the money. You've got Gen X, which is like me, Oscar. We're locked in at what? What's your rate again?
2.875.
Yeah, I'm at a 3.125. Am I moving? Hell no. Why would I move? Okay. I
Hell
don't need
no.
to because I already own my home and it's an asset. But I'm going to address the haters, okay? Because I know as soon as I post this and you post this, somebody's
Hey, I'm gonna post it. I've been
saying,
pretty
like-
shitty at posting. Okay, I've been a little busy. I'll post it too.
What I'm saying is, as soon as somebody listens to this, the first instinct is going to be, well, you guys are just realtors and you're just trying to convince people to buy
No.
when it doesn't make sense. That is what it's going to say. Here's what I'm going to tell you, and I'm going to use my own personal experience.
And I'm gonna
Sorry,
tell
but
you if
I
it doesn't make
wish-
sense, I'm not gonna do it.
I wish
Exactly.
people knew me before my real estate era, because if you did, you'd be looking at me and be like, Charlie, what are you talking about? You used to be
Right.
long-haired hippie and then, like, screw the corporation. It's like, no, man, I learned.
But here's two facts that I know to be 100% infallible. You cannot prove me wrong. Number one, U.S. credit card debt hit what? $1 trillion.
Whoa.
Number two, the average U.S. household has $1,000 or less in their savings. Okay? Those are two facts. Now you tell me if you fit those two bills. Let's say you've got a shit ton of credit card debt. I think it's on average like $25,000, $30,000, and you have less than $1,000 in your bank account, in your savings account. Give me a way that's not, I'm going to invest in Bitcoin or something else that's going to make you enough money to pay off those debts. Give me a way.
Let's not even talk about
Literally,
NFTs and what happened there.
give me a way. Give me a way that it doesn't involve in investing in some fucking moonshot shitcoin. Give me a way that doesn't involve you getting 3 different side hustles and taking feet pics on OnlyFans. Give me a way that it doesn't have you and your wife and maybe your kids working 2 extra jobs to save that amount of money to then pay off that credit card debt. Give me a way
Street
that
pharmaceuticals.
without owning a home, you could do that. Because here's what I also know to be true. Even right now, I'm at a 3.125%. If I had the credit card debt that was on average what it looks like with the rest of the United States, I would do 2 things. One, you can take out a full second mortgage now and keep your first mortgage, and it can go in first position. It's a 30-year. And you can take that out and you can pay off your credit card debt. Number 2, let's say I am at a 3.125, but I've got $150,000, $250,000 in equity in my house. I can take a HELOC out at a 7.2%, and I can take all of that money and I can pay my credit card debt that's at a 30%, and I would actually save money or be break even on what I was making as a monthly payment before. I can only do that if I own my fucking house.
So-
you cannot do it renting. You can't do it renting without having 3 jobs, and you can't do it renting with only having $1,000 in savings. And people are going to say that we do this because we're forcing people to buy. No. We have personally firsthand witnessed, whether it's ourselves or our clients, when you get into a home and you have that very steady payment and your house is appreciating, it can be life-changing, especially when it comes to debt management.
I will never sell you something that I wouldn't sell myself.
Right.
I won't sell anything that I cannot sell myself on. When I
mean,
bought,
to get passionate there, but
it's true. And when I bought, I had a little bit of buyer's remorse. So I was like, it wasn't an uptrend.
Same.
And I bought, it was top of the market at the time, and it was a little lull when I did buy, and thankfully JC and I hit it off. So he called me up and we made it happen, right? And I was like, buyer's remorse. All right, let's do it. Let's go. Dive in. Got it. Got the house. And I did just that. I got a HELOC still when rates were low, I was like, you know what? I'm gonna ride this train.
Yep.
I'm gonna get a HELOC just in case. I actually did it because I was finishing my basement and all that. Now I've invested. I pulled the money at stupid rate on a HELOC. I mean, this credit union gave me a 15-year payoff, pull from it for 5 years.
Yep.
And if I were to use, let's say I use $130,000 of that HELOC, guess what my payment's gonna be?
At the end, on a 15-year? Oh,
Yep.
Fuck, dude, I don't know. $280?
$480.
Yeah.
And guess what? I cleared out a few credit cards.
So that was what my point.
You know,
was
and it's at a 5% interest rate.
Yeah.
And hopefully, if things go good, I could pay that back in less than 15.
Yep. Yeah, we bought a house right after we got married.
And the money that I spent in my house,
Is gonna yep.
if I were to sell my house right now with the full basement, the shit that I did, oh man, my house
Added
is
bedroom, added bathroom.
I added 2
bar,
bedrooms,
yep.
bathroom, bar, media room. I added a bunch, and it just helps the equity of my home.
Yeah, we paid off $32,000 in credit card debt that we averaged a 21% interest rate on by taking a HELOC out at 4.5% because I own my house and I'm paying interest only on that. And we've actually set aside the money that we saved on the credit cards that we're no longer paying and are almost paid off on the entire HELOC in a year versus
Boom.
15 years. Mm-hmm. You can't do that without being able to own. You just can't.
No.
And that's why, hopefully what you guys saw, like in order for us to get back to normal, it's a Herculean effort. So don't use that as an excuse to not explore that option.
And guys,
It's a lot easier
at least
to go
for
the easy route than it is to go the hard.
and at least for me, it's not me trying to, hey, I want to sell real estate. I want to sell real estate. Yes, that's what I do for a living. But it's like, come on board. Do what I'm doing.
Yeah.
Let me show you how I did it. And, you know, there's other industry people that are like, hey, let me show you how I'm making passive income,
Correct.
which is another you know, portion of this. But
Yeah, we didn't touch on that. I mean,
bare
we just
minimum,
do-
I want you to come on board and do what I'm doing and see how it's helping me and my family out.
Well, and so we thank you guys for coming in on a conversation that we have on a regular basis and sitting with us. Jameson, I see you have something pulled up on the screen. Is there one more thing that you want to?
Yeah, I think the whole when people are talking about this, right? Then the next question is, well, James and Oscar Charlie, when the fuck is it going to be normal? Okay,
What's a normal market?
what's a normal
What
market?
is
Like,
normal?
when is it going to normalize? When are we going to start to see? Because again, to reiterate, right? There's 3 things that are going to drive affordability. It's home prices, interest rates, and wage growth. Of those 3, the easiest one that's going to move is probably wage growth, but it's also the slowest, right? But it has the least amount of headwinds, I guess you could say, right? Home prices have a shit ton of headwinds. Mortgage interest rates have a shit ton of headwinds. Wage increase, not as much, right? Because we're starting to see, we obviously see the economy's humming along, record profits. Those will get reinvested into the workers and whatnot. So if we were to say, okay, when do we think this is going to start to normalize? Now, remember, we said that home prices are going to probably appreciate at least 5-6% every single year. That's important to note. All of those things working in concert, the best scenarios that we've seen is around 2026 is when you're going to see wages come up high enough, rates come down just enough, and then new build construction to catch up with what the demand is. But that's 2026, guys. That's 2.5 years. And in 2.5 years, if a $600,000 house is now a $700,000 house, and your rates came down from an 8% to like a 6%, but that unlocked 5 million buyers that are all now competing in that because they have FOMO, it's going to cost you more in 2 years than it would now.
And it goes back to what I said.
Yep. Full circle.
So I agree 100%. And the thing is, there is no such thing as a normal market. I've seen it evolve. It's always
It's a
evolving.
market.
It's a market.
It's a
It's
market.
always evolving. It's not going to go back to.
There's too many factors.
There's too many
that
factors.
apply.
I mean, and again, you know, you name 3, and then what do people do as soon as they get a raise?
Right.
They go buy shit.
Exactly.
And mortgage and all that stuff is probably not one of the things that they do. You know, I just got a raise. I'm gonna go buy a trailer. I just got a raise. I'm gonna buy another car. So
you're
that
joining-
right there has its skewed percentages.
Yep.
And it's okay. So we'll go down that rabbit hole, but it's just the market's gonna do what the market's gonna do. You just gotta know what you're doing and talk to the right people.
You know what, Oscar? That sounded a lot like a one rock takeaway. So I think it's
All right, and that's gonna be mine.
Well, I think it's yeah. Let's go ahead and move into the one rock takeaway for today's conversation. Oscar, I'll let you reiterate it.
And you know, I'm not even go back to talk to the right people. You know, weigh your options on your what you think is best for you, and then go talk to an expert. That's it.
Jameson?
I'll reiterate one of my favorite lines. Time in the market will always beat timing the market. To Oscar's point, there's no such thing as a normal market. It just depends on when you get in and how long you can ride that train. I'm finding myself less and less inclined to just listen to people go, well, we're just going to wait. And normally, like, I'm not I am a salesman, right? But this is a consultative business. I go back to if you're going to wait, just make sure you are backing that decision up with the best possible information and the best possible advice from the best possible people.
Because there is a lot of scenarios that you're going to have to wait. You come to me and we're like, you're going to have to wait. Or you make sense. You go rent right now.
But if there is a scenario where we talk about it and you look like you're ready and we talk to a lender, I'll push. And I'm not pushing because I want to sell you a house. I'm pushing because I've firsthand seen what owning a home does to every single one of the clients that I've actually sold a home to or helped buy a home or helped sell their home and unlock equity. Like, it is, when we say life-changing, it is life-changing. Like, that's just, it is what it is. And people are so less stressed when they realize, like, hey, I got a fallback. Like, I've got something tangible that I can use or I can leverage or I can do whatever. So it's not me saying, hey, you know what, you need to buy right now or you need to sell and upgrade right now because it makes more sense than it will in 2 years. However, based on your factors and your specific scenario, that could very well be true.
Without an asset, can you pull $100,000? Maybe business loan?
Illegally, sure.
Okay. But with an asset, how easy it is to, hey, tomorrow you'll have $100,000 in your pocket.
So this is where for my One Rock takeaway, and this is something that I deal with on a regular basis, especially being in the industry, right? I want to talk directly to everybody that is in the position of renting and saying this market is not conducive. I can't do it. If you can't, you can't, right? And guys, I go through the imposter syndrome all the time. I sit with 2 phenomenal real estate agents that own assets. I am the one out of the 3 of us that's still rent, right? And I feel your pain. I get it. I want to build a house. I want to start growing with my significant other and have an asset and do something. But as of right now, as I'm trying to build 2 separate businesses and my girlfriend's starting a career, it's just not doable. And I'm sorry that that's the reality, but a lot of the time that's what you have to do. Look in the mirror and be honest with yourself. Would you rather be angry about how it is or take the time to learn it and understand it and create a plan that's going to get you there? And I'll be real with you. We're probably not going to buy a house in the next 2 years, but I'll damn well know how much I can afford by the time I get there. But that's because I'm putting in the effort. I'm learning. I'm trying to see what is doable and listening to people around me that I have that have done it and have the experience. So if you're not willing to compromise and you want to stay in a place and you love it, like I love Colorado, learn more, teach yourself more, talk to people, because it may not be possible now, but it is going to be possible in the short coming future.
You know, what's crazy, you're in the realm of if the right opportunity comes across my desk, his desk, he will be in that realm.
Yep.
And that's an important point, right? Like, we always talk about results equal preparation plus opportunity, right? Well, if you can have the opportunity, but if you haven't prepped yourself or educated yourself to recognize what that opportunity is, it'll pass you by.
And
a
you'll
lot
be
of people
surprised. Don't cut yourself short.
Yeah, a lot of people live in that negative mind space of it'll never happen to me, and I can just see opportunities just passing them by.
Yep.
And then all of a sudden in 5 years, it's like, man, I really wish I'd gotten that train.
Yeah.
And we're going to sit there, and I'm not going to tell you I told you so at all. I'm not that person. But at the same time, like, I want to give everybody an equal opportunity to utilize myself or Oscar or Charlie for our knowledge and for our savvy and for our ability to network and to find opportunities for people and utilize it. And if you don't, like, that's on you guys.
Yeah.
Sorry.
Well, when I was under contract on the house in the Meadows, I called my roofer. Trust him. Great guy. I don't trust anyone else. Step on my roof and tell me that I need a new roof. Phenomenal dude. Great business. Huge company. While he was inspecting that roof for me, he said, Oscar, I know you're the expert, but is now the right time to buy? I mean, you know your shit, but really? You're going to buy in this market? Oh, boy, is he eating crow right now.
Yep.
Oh my God, is he eating crow? And
Yep.
he actually just did my roof because we had that hailstorm.
Yeah.
And he was like, dude, your house is dope.
Yeah.
Right.
I was like, yeah, but remember when you were telling me you
My
shouldn't
monthly
buy?
payment's even more dope.
Yeah.
And again, like I said earlier, guys, thank you so much for sitting with us for the hour and talking about it, because these are hard conversations,
They are,
right?
yes.
The main three things or two things you don't talk about is money and religion, and
Right.
we're sitting here talking about your money and what you're able to do as three guys sitting on a couch. drinking
And they're
bourbon.
not really hard conversations. They're fun conversations. Let's make them fun. Let's
Right.
get them out of the ugly and make them fun.
Yeah.
Hey, you know what? Can you? Yes, no. And then let's just take the nasty out of it and let's talk some numbers.
Let's plan.
I love numbers.
Exactly.
I love numbers.
Well, phenomenal episode, guys. Thank you for the conversation, as always, the information. I think now is a really good time to move into the bourbon review for today's episode. And I'll tell you, this is a sleeper.
you know what this reminds me of? Johnny Drum.
Yeah.
Because we bought it and we're like, it's a product of Willet.
Yep.
And it was actually pretty
Yeah.
fucking good.
Well, and I don't know if you guys noticed, if you're watching the video, you couldn't see it, you couldn't hear it if you're listening, but Oscar halfway through took the cap off, and I think that's a tell for this bourbon in general. Like the first time when I took the first sip, I was amazed that it was 113 proof
Yep.
and it wasn't as ethanol heavy and the burn wasn't there, but I was still a little bit skeptic because the flavor evolved, but not a lot. Sitting here open, yeah.
I mean, it brought in a maple
Yeah,
taste to
yeah,
it.
a little bit more
It
of a sweetness.
sweetened it up.
The sweetness.
Oh, it turned to candy.
Yeah, and
That's
it's
why
not
when you put it back, I was like, oh, it's tasting
right.
better as it opens
Yeah.
up.
Well, and not only that, I almost feel like the char came through more.
It did.
Like the
Like the flavors became more pronounced.
yes, absolutely, and obviously that's what opening up does. But it just goes to show that, like,
And evolved.
if you
It was great.
right? Yeah, if you go and you pour out a bourbon and you judge it off the first sip, you're getting the wrong thing, because
Yep.
my rating now is totally different.
Yeah.
from when we first started.
When you buy a new bourbon, you're probably gonna have to sit there, and you're gonna drink.
Yep.
You're going to drink a good portion of that bourbon
Yeah.
to understand that bourbon. Now, if you have a bourbon that it's your go-to, and for me, it's Elijah Craig, I could have one sip and know what I'm going to get
Yeah.
because I know that bourbon. But like this one, I'm glad this is my second pour. But when I poured the second pour and it was already opened up a bit,
It was like it was a different glass.
Yeah. Well, I mean,
it was a
even-
different bourbon.
Even on the nose, like,
Yeah.
I said at first that you have that wheat forward. Now I'm getting punched with that sweetness right on the nose.
It turned to a very sweet, and that's why I said let's not put the cork back in for a few reasons, but letting it just breathe,
Yep.
it turned into a different bourbon.
Yeah.
Turned to a way different bourbon.
And again, it's funny because, when we first started the podcast, and for everybody who's been watching, our rock rating is on a scale of 1 to 10 based on how many rocks or how many ice cubes you put in the bourbon. But as we start exploring and we taste these bourbons, I mean, I think the last two bourbons where we were like, wow, this is good. We were just sitting here like, damn, I don't know if I'd put a rock in it.
Right.
Like and so it's hard to rate it on that level, but still, I think that, having had now 44 different bourbons from, we can even say brown bag, up to premium,
You're welcome for that one.
right? A $75 bottle that we were not blown away by. It's been an extremely interesting journey with the bourbon to see the complexity and give it time. Treat it with a little bit of respect.
Yeah.
Because don't just open the bottle.
Go
take a sip,
go into a good bourbon with a mentality of study.
Yep.
Like you're gonna open a book, you're gonna study the book. You're gonna open it, you get the neck pour. Okay, drink it.
Actually-
and then you're gonna let it breathe. You're gonna have another pour.
I want to
Drink it.
It's opened up so well. I'm gonna get one of the water droppers that we have here, and I'm gonna
While
drop
you're doing
some
that,
water.
I'm gonna have a bone to pick with you. Yeah, Charlie, you're a jerk. Let me tell you that much right now.
Yeah,
I
Charlie.
went and had ice cream with my kids this weekend, and my 2-year-old licked her ice cream and said, "Ice cream's so good." I hate you for that.
Oh, that's great. If you don't know what we're referencing, we're talking about the
Stupid.
AI trend on social media where it's like they act like a robot. Really.
I was sitting there, I looked
Avatar.
at my little girl, and then my son's like, "Ice cream's so good." Ice cream,
right.
I'm like, "Shut up, Charlie." I fucking hate Charlie right now.
Oh, that's amazing.
And it brought
That's
up when you said ice, and I was like, ice cream. I was like, next time I see Charlie, I'm gonna tell him, because it was like, all right, so it's the AI, right? And it was like 10 o'clock at night, and this one that we're referencing is only on twice a day. And it's like noon and then like 8 o'clock Eastern, so whatever. It was perfect timing, and Charlie's like, send. She was on, and I picked it up, and I was like, what the fuck is this? And then I was on for like 20 minutes, and she's like, ice cream so good. And thank you. And then gang. And I'm like, what the hell? I can't stop.
You start watching it,
yeah,
you're like,
you
what
just
the hell
get
is
sucked
this?
in, and it's like,
then
I can't
20
believe.
minutes later, you're like, how many fucking times is she gonna say gang?
Yeah, and I was like, I can't
Why
never.
is she popping popcorn with a hair straightener?
Yes,
I want to
the whole time.
Yes, seriously. And now it's like, I can never get those 20 minutes back, and I think it's over, and then I go have ice cream with my kids, and my 2-year-old's like, ice cream's so good, and then my 5-year-old's ice cream's so good. I'm like, I fucking hate Charlie right now.
Oh man.
No, but dude,
All right, so
seriously,
one drop
good.
of water in it. The burn's almost gone. Again, sweetness punches through. Yeah, that's a totally different bourbon.
It's delicious. I like it.
Dropping the water in it, sweetness is there, but it's almost like a sugar on the palate. It's like it definitely just explodes that sweetness, and that sits and that lingers a little bit more with that drop in. Oh man, still a lot of wheat, still a lot of spice forward, but that back end, that smoky maple sweetness punches through and sits on the tongue real heavy. For sure.
I would love a good cigar with this one.
Yes.
Yeah.
Oh my God, absolutely.
With the
Maduro?
sweetness. Oh, Maduro.
Like a dark wrap cigar with this would be phenomenal.
Yes.
Phenomenal. Well, I'm going to go ahead. I'm going to take one more sip. I don't know if you guys want to take the rating first. But
I'll take the rating.
Okay,
I'll take
go
a good
for it.
rating. I didn't know what I was grabbing.
Actually, hold on. Before price point, how much was the bottle?
If you had to guess, what would you guess?
I can't. I bought this bottle before, so I
Okay.
If I had to guess, I would, based on other bourbons that we've had, 55.
So from this liquor store, they have okay prices. They don't have the best. You could probably get it for a better price. I paid $48 for it.
Hell yeah.
$48 for it.
I mean, that and the reason I asked is because that does play into my ratings.
Oh, yeah.
You know,
Yeah.
absolutely.
just like with the Basil Hayden 10-year.
Yeah, exactly. And I mean, like I would cook with this,
Yeah.
especially you know.
So what did I make? I made a barbecue sauce this weekend, and I added some Elijah Craig, and then I added some red wine that we really enjoyed, and I made a good barbecue sauce, and I
would, yeah. This I
was
think
good.
if you did like
it would lend itself well for a barbecue.
Absolutely. I mean, all right. So Oscar, what's your number on it?
You know what? For this one, if I had to rate it at the beginning, I'd probably be like a solid 5, just because it was okay. It was kind of earthy, which is not my jam. And as we sat here, and I took the cork off for a reason, because I was like, oh my God, it's actually evolving pretty fucking good. I could sit here and drink the rest of this bottle today. I'm gonna go with maybe 3.5, man. It's a damn good bottle.
Hell yeah. I'll go ahead and take the second on it. I mean, exactly what you said. I the surprise of it at first, absolutely. I was like, oh, okay, another small batch.
113 proof.
Yeah, another small batch, but 113 proof opens up well. I'm a sweet person. Like
You are a sweet person.
thank you. Thanks. Precious.
Personality, and he eats Reese's a lot.
But this is for me. I think I'm actually leaning more towards a 3 for this.
Damn.
Especially after I dropped that one drop of water in.
Yeah.
Definitely going on a 3. I would, for the price point, for the flavor, the complexity that you get out of it, and again, just the sweetness, but it's almost like a sour tightness on the tongue. I vibe with this heavy. I like this a lot. Yeah, 3.
It's definitely a good gem.
I'll sit on. I think I'm going to give it a 3.
Yeah, I think it has a really good balance between that charcoal flavor and sweetness, which I like. And I like that because, it can pair with, because I also look at it from a cocktail standpoint.
Yeah.
This would go well in almost anything.
Everything.
You can make.
Absolutely.
Everything.
But I think it's because it has that balance between sweetness, especially if you let it open up. If you serve it as an old fashioned with that single rock,
Yep.
and then you have a little bit of bitters and a cherry, like it'd be great. If you
I would probably cut a little bit off the simple syrup.
I wouldn't do any simple syrup.
Yeah.
I
really
I'd
wouldn't.
see. This is one that you'd have
And
to do.
it's crazy,
because
right?
I want the charcoal to come through.
because this
Or-
is 113
or-
proof.
Well, I was
do
going
the
to say
simple
this is.
syrup and you smoke it.
Well, I was going to say this
Okay.
is one that I definitely think that you have to do if you're going to do an old fashioned. It's a sugar cube or actual sugar over
Bartender,
over a
man.
syrup.
Absolutely.
Because
I agree.
it won't, the syrup is going to be way more concentrated and open it, but this one for sure,
Right.
a legitimate, or even like, I would love to have this in a true whiskey sour or a New York sour where you add the port wine on top with egg whites. This 100%, like this, this
Dude,
would
you
lend
fucking
itself.
nailed it.
Yeah,
Yeah.
this would lend itself.
Yeah.
100%.
But
to that.
because of its the variety of ways that I think you could enjoy this, when I think of bourbon, I'm like, okay, well, you have your ones that they have a lane, right? Like this is what we do,
stay in your lane.
and they stay in their lane. I think this is good enough that it lends itself to a lot of different bourbon drinkers. And again, even if you're a newer bourbon drinker, having this in a cocktail, I feel like if I poured this
You're gonna love it.
as as like a New York sour, for example, with this versus a New York sour with, I don't know, call it Basil Hayden's, like you will notice a difference.
Yes.
Oh,
Well,
hell
I mean,
yeah.
just
You know what I mean?
spices in general, like
Yeah.
the spice forward
Like-
on this would blow away a Basil Hayden.
Let's take out the watered down shit. Basil Hayden is not as complex as this.
No, I mean, even the 10
But,
year.
but that's my point. Like,
Yeah.
But I could do that. Then I could turn around and pour it neat for somebody that really does enjoy bourbon. And be like, wow, this is
and
a
he'll
really good
appreciate
pick.
it.
Yep.
So, I mean, I'm going to go with a 3.
But dude,
honestly.
God damn it, you nailed it.
Yeah.
No simple syrup because I'm a simple
Yeah.
syrup dude. But
Yeah, a sugar cube.
this
would
with
be-
the sugar cube,
Yeah.
nailed it. This
Sugar
would
cube
do
would-
great.
Yeah, with
agreed.
and
I agree.
If you got, as a bartender, if you're drinking your whiskey sours and you don't have egg whites in it, you're missing out.
A flip? You got to have a good flip. You need a
I was
flip.
going to say the fats in the egg whites adhere literally to the sugars. It opens it up. It gives you a way more complex flavor. And if you pour a little bit of port wine on top of it, give you that bitterness with that little tinge of sweet. I legit, I want to make a New York.
You need
New
a
York
flip
sour.
in your life.
Like, yeah, it's phenomenal.
A good flip is
phenomenal. Well, guys, so I think it's a 3 from Jameson, a 3 from me, 3.5 from Oscar. Oscar, great pick, man. Great
thank
random
you.
pick.
Thank you.
Great random pick. This was phenomenal. So if you guys are out looking for some bourbons and you want to try something and you enjoy bourbon, or if you want to make a cocktail, definitely check these guys out. Like Oscar said, $49, $48, depending on where you are.
Yep.
But just like these guys, where you can find them online, anywhere else, you could also find us on social media. You can find us on YouTube. Oscar, where can they find you on social media?
OscarTheRealtor.com, OscarTheRealtor.co, OscarTheRealtor, COOTR.
Nice. J-Mo?
The Colorado real estate guy. That's it.
That's
where
it.
you can find me. Facebook, Instagram, TikTok.
Heck yeah.
Apparently, Oscar is a common name, and there's a lot of realtors out there, so I had to like CO it and all kinds of dumb shit. So.
I am at that lifting agent, Instagram, TikTok, Facebook. You can find me at Charlie Sardelli, or follow my video production page because this is what we're doing here, right?
Yep.
Or send him some Lululemon shirts, extra
Yeah,
medium.
right?
Let's go.
Well, guys, if you want to get in contact with us, don't forget you can always reach out via email and phone number. Email is resotr@themilehighperspective.com. Give us a ring.
Phone number 303-578-0263. And on YouTube, guys, we're living in Colorado, the Mile High Perspective, powered by Fathom Realty. And we're all located here in Denver, Colorado. So if you guys have any
Metro,
questions,
yeah.
please let us know how we can help.
Yep.
And you know what?
hey,
I got to give credit to these two. I've been super inundated with the real estate shit. These guys have been holding it down, doing neighborhood spotlighting.
We got some stuff.
They've been really doing some good stuff. So hey guys, cheers to you.
Cheers.
Thank you.
Thank you. And everybody, follow along. If you want to have a conversation about real estate, let us know. If you want to argue with us, let us know too. Because
I'm
at the
down
end
for
of
a
the
good
day,
argument.
I'd love to educate you. We'd love to educate you.
We'll
and help you
argue,
out.
but we still love you.
Exactly. So on that note, cheers. We'll catch
Cheers.
you on the next episode.
Salud.